Right, hello YouTube. This is the third video, English video for my channel. Welcome to my channel. If this is the first video that you see, if you get to this video first, then you can just go and watch the first one or two videos, then get back to this one. Today, I just want to go continue on the video that we've made for the first and the second one. On the second video, we spoke about a little bit about structure. We spoke about flags and pullbacks and things like that. And someone want to show you the moves that we caught today, and then we'll continue on the discussions. Let me just get this thing a little bit yellower. Just look at this. The move that we got from the harmonic scanner is the scanner that I'm using from the IM Academy, IM Mastery Academy. We've got a scanner that's scanning the market and giving us patterns like this one. This is a shark pattern, and at the D point, it is telling us it gives us signals like this. At the D point, it told us to buy. It gives us our stop losses, and then it gives us our take profit 1, 2, 3, and then you can trail as you want. So we already hit I think it hit the take profit 2 as well, 1 and 2. So now it's making a little bit of a pullback, and then it's going to continue up. So now our stops are break even for the third trade. So we made a nice, I think it was over 100 and something pips on this trade already. Let's just mark it out from here. We had the drawdown of 22 pips, and then it went 115, 16, 121, whatever, somewhere there. So, but we'll get to those things. I just want to continue on the video that I've made. The people asked me. I've got some new guys that I'm also helping. I don't want to say teaching. I just want to. The channel is only for the basics, guys. It's just to get people into the trading thing, getting people involved in what we're doing, and so we can go through all the things that I know, and we can definitely go through my trading style, and I'm gonna share a few different strategies with you guys. I think tonight's one will be the strategy that I've heard of and saw a guy on a seminar trading, and he's we're calling it the 2020 strategy. So that's the one I'm going to share with you tonight. But I want to talk to you about market structure first, a little bit about support and resistance and things like that. So you'll see what the banks is doing, and all the people in the world doing, all the YouTube channels doing, is they're telling the people, listen, go and check for support and resistance, go and check for trend lines, and they show you the patterns and things where you must trade and how you can trade it. So what I want to do is I want to show you a way that I am staying away from the support and resistance on my one strategy, and then I've got a strategy where a very good strategy that I'm using the support and resistance. So there's different things, but you should look for when you get to that certain areas, and then there's different things that you can trade in different times and all those type of things. So I don't know if I've mentioned it on my previous video. Let's just go through my strategy again. What I do is I come to the weekly, and I plot out all the major areas. Look, this is 2008, so this is definitely an area of the structure here, but I don't want to go all the way back to 1940 and things like that. But this is definitely an area that we can look for because we are close to it. So we just want to know, listen, are we close to a weekly support and resistance area? We can, I think we can move this thing. What about there? No. We'll put a new level there. Let's just put that one at the bottom. And then I want to search for one that's a little bit closer to price right now. Maybe one day, 1, 2, 3, 4 touches, something like that. Okay, this is on the weekly, guys. So we are not close to support and resistance. Where the price are now, we are in between. So I think we can all agree that price is going up. So I would look to continue for price to go up and up and up and maybe up until here, and then I'll stay out of the market again with this strategy. When the price was here, I would have stayed away. And I'll explain to you guys, what the banks are doing for the guys, or for all the traders, not doing for them, snooping them. They're stealing, not stealing, they're trading in a way that they're taking our money out of the market. You'll normally see a place where the banks manipulate price, making maybe equalize like this. And then people will start, they're telling you, listen, this is an M. So people will start selling here, putting price stop losses above. Then the banks go take all the stop losses out, and then it moves in your direction. So this manipulation, I'll show you plenty of this while as we go. But it's not the topic tonight. The topic is to stay away from the support and resistance areas, like you see what's happening here. If you can stay away from this, you'll be safe, because the banks need billions and millions of dollars to trade to fill their orders. So if you trade where they're not trading, then you're safe. So let's say, for instance, this is an area where the banks would be involved in. This is an area where people will see, okay, the market comes here, or it retests there and go down, go the opposite direction. So I just stay away from those areas. Like now we are in between these areas right here, and I just want to continue until we get close to the resistance up there, and then I take my profit out of the market and I'm done. So the first thing that I'm doing is I go to the weekly and I mark my support and resistance areas so that I can trade in between them, not trade where they are. So now, remember our strategy that we're using is we plot the support and resistance areas like we did here, and then just move this up a little bit. And then if the market, as the market goes in between them from here to there, what we do is we trade this. We trade the flags. That one, this one, all the pullbacks. That is what we are doing. Now here, this one I will not trade because we have like the equal highs here. Let's just make it a little bit clearer. So we didn't make a higher high here. This is actually a lower high than this one. So even if this is a flag, I need to see a higher high of both of these ones, and then if we get a pullback like this flag, I'll trade it all the way up there. But just look at all the potential movements and all the potential trades that we had in this one trade, in this one pair, where it's AUD USD. We had 1, 2, 3, and then there's a possible another one coming up. So let's just go. The trading style says what we need to do is we need, if we see the flags or the pullbacks on the daily, we go one time frame lower, and then we activate our indicators. So the first thing, let's go to the 4 hour and check the street trades, how they would have played out. I know it's easy to spot everything once they already happened, then it's easy to show people, listen, but you should have done this and should have done this. But I just want to show you, even if you don't want to trade on the 4 hour or the daily and things, just go for the support and resistance. Once you see you're moving out of this, then this is where you can start to trade. So now, for instance, look at this pullbacks. Look at this flag here. Look at this flag here. This is on the 4 hour. So we can go, let's make this different colors. Then we can go to these, and we can go to these ones and see them on the 1 hour. Or you could have traded them on the 1 hour. Inside that 1 hour, there will be flags that you can go and trade on the 15 minute and then on the 5 minute. So you can it depends on what you want to be. If you want to be a scalper, you can look for the smaller ones. But that's now we're on the 4 hour. So this was the flag. Then what we do is we put our trend lines. Let's just make this a little bit bigger. And take away this. Take away the circle here. We almost know where the flag was. So I would do this. This spike was probably just news. So the one thing I would do, there's one touch there, 2, 3, 4, probably maybe 5 touches there. That's a better trend line than one like that, where you have these 2 touches. You understand what I'm saying? So what I would do is I'll use the multiple touches to make it a better flag and a more valid trend line like this. And then let's activate the moving average and see where it crossed back, just about there. And the indicators that I've showed you guys, let's just check what happened here. Okay, so the indicators, we'll go through them again. My settings for my moving average is at 20. I usually trade at 12 is my entry, and then at 20 is my exit. I'll show you now how I use it as an exit indicator. But I don't like the price getting in and out of my indicator like this, so I use a trend line as well. Then I know when it breaks perfectly through the moving average and it breaks my my trend line, then I know I've got a signal to go buy, to go long. So let me show you. If I move this thing a little bit up, this is the Rune oscillator that I'm also using. The settings must be at 6. Okay, so the settings is at 6. And then we've got the normal MACD, and I use this, just the 2 lines. You can actually take this, the Instagram away if you want. The histogram, you can just take it away if you want. It just shows you when the price is crossing. So what I will be doing, I will be looking for the blue. When the blue line is on top, I will be looking for buys. And then when it's on below it, I know it's a pullback. If I know where the direction is that I'm going, and then once it goes on top again, I'm looking to buy again. So this is a simple strategy, guys. You must just remember to go 1 time frame back. So let's check the confirmations, and then we can see where we could have taken trades. So the first one that I see here is this bullish engulfing, a little bit of an engulfing candle here, a nice strong candle breaking my trend line and breaking my moving average. That's my first confirmation. My second confirmation, I need my blue line to be above my orange line, and that only happened here. It wasn't there, so I'm waiting for it. And then on my Rune oscillator, I want this to be on the 80. Above that line, that's 80, and below this line is below is minus 80. So it's minus 100 and 100. So whenever I'm selling, it needs to be below the 80, and then whenever I want to buy it, it should be above. So let's put it there. Just to be safe, let's put it there, so that you can't say, no, but I'm fooling or whatever. So all the lines agreed here. So what we do here, let me show you. We go to this candle where if it when it closes, that's when we put our trade in. So now let's put away the indicators. There's too many things happening here. Let me take this away. And now I just need the one indicator here, the ATR. At this candle, we use the average true range. The setting is, I think it's 14 normal. Yeah, it's 14. And what I use this for is, at this candle where I'm entering, I'm just checking what the ATR is telling me. The ATR now is 48 pips. So we use 48 pips times 1.5. 48 times 1.5 equals 72 pips. So my stop loss is going to be 72 pips, and that's going to be 1% risk. 72 pips, and then I'm going to go only for a 2-to-1 risk to reward for now. Just a little bit above for the spread. So just look how easy this trade was. From there, we entered there, and then the exit was there. But guys, how I'm trading this thing, I take one trade. Let me just make this colors a little bit different. Let's put it on green. So what I'm doing is, I take my first take profit at 2%. So I'm risking 1% for 2%. Sometimes I take 3 trades here. Then I take my first take TP at 1-to-1, my second one at 1-to-2, and then my third one I trail. I let the market run in my favor, and then I see how much I can get out of it. So what I'm doing there and how I'm doing this is I move this for the third trade. So this is my first trade gone, my second take profit gone, and for the third one I move this moving average to 20. And then I just check for whenever it breaks back below the moving average, and that's when I get out of the trade. So let it just go, and we'll see it shifts a little bit. And yeah, my trade would have ended around about there. You see there, it broke back. Sometimes it stays above for many pips going upwards, but now you can see we are in a sideways market here. The market is moving sideways. So the smaller flags are here, and this was also a flag that you could have taken. And obviously by now, your like a trade like this one, I'll move this one. Even my first take profit gets hit, I move this one to break even, my stop loss. So my second and my third trade will be risk-free, and that's exactly what we would have done here. Take profit one, and then risk-free, and then this will beat your stop loss at your entry price. So This is the first trade that I would have taken, and then the pips here on the trailing one would have been 237 pips, 237. The first time it breaks my moving average again, then I get out. So that's how easy this strategy is. I look for flags and I look for reversals or pullbacks in the market, and then once I see, okay, listen, something's happening on a particular time frame like this one. If let's say I'm on the 4 hour and I see this, let's go and enter this one on the 1 hour now. So we saw the pullback, we saw this first candle on the 4 hours, so we move one time frame down, and we go and see what we see, or it was a possible entry or not. What is the indicator saying? So that's the pullbacks and flags that I'm trading, guys. Just look how much pullbacks and flags we are seeing here. There's one. This was one, but okay, you will check it on the 15-minute. There's another one. There's another one. It's all buys because we know the market is going upwards. There's another one. This is a little bit sloppy, but you can see it's more or less a ascending channel for a breakdown. So there's no marks, no trades there. But let's leave all those ones. Let's just come to this one. And I want to show you guys how I would have entered this one using the same indicators, the same settings. If you go lower, maybe on a 15 minutes, sometimes as it changes a little bit, I play around with the moving averages and so, because it doesn't show as nice because it's on the lower time frames. So, but I'll show you guys. Let's just put this thing on and this one here. Just look how nice this flag was, guys. Remember, we're coming from the weekly now. Yes, still the weekly. So if you missed this, you don't want to trade here. You want to start trading when you see the flags. That's when you know we're going upwards. So all you're doing now is waiting for pullbacks. You're waiting for the pullbacks. That's actually your job. Remember, we traded this one. We entered here. Now, let's say I've missed this. Now I'm getting a flag here, something like that. Or you could have taken it something like that, there and there. You know what I mean? Just take the tops. Let's say you take it there. And it's going to look too good to be true. Let's make it something like that. Let's say this was our trend line. It looks a little bit ridiculous, but still. So what we're doing now, okay, let's take away the indicators. So we're seeing, okay, listen, this thing is breaking up. Breaking up is giving us this candle again. Let's activate or put the indicators on here, and we see, okay, now it's breaking. This one didn't break the moving average yet, but this one did. So for confirmations, let's put the horizontal lines again. The first confirmation I get here was there. My blue only got there, and my maroon was there. All right, so all of them aligned. Let me just check this one. Yeah, blue is above orange. You can see it there. Let's make it bigger so you guys can see it. You can see our orange and blue is above orange, so it's perfect. So they're all aligned there, and that's where we take the trade. Let's put our long position after this candle right there. Let me just take those things away here, and then the ATR says 19 pips, so it's going to be about a 30 pip stop loss. You see, the stop loss is getting way smaller on the smaller time frames. On the smaller time frames, the stop loss, the previous stop loss was 72. This one is now 30, but also the reward is a little bit smaller. So let's just check here. This is still 1%, guys. Remember, on this one it was 72 and I put 1%. Now this is 30 and I put 1%. So my pip value is much bigger on my smaller time frames than on the bigger time frames, because I'm risking 1% per trade. So the smaller the time frame goes, let's say this gets to 10 pips, then I risk 1% and I get to my 2% much faster. Maybe in 20 pips I hit my top. But my main reason for this is, remember, my main reason why I'm going from this to here is to get all this. I want to get in here up to there. So this is a small trade. Yes, it's 2%, still 2%, but this can give me 25% up to there. Even if it's a 72 pip stop down here, because this will be hundreds and hundreds of pips going up. So that's what I'm saying. I'm trying to get longer moves. That's why I don't want to be in front of my computer the whole time. So if I catch a move down here, and I can put my stop loss at break even, then I'm set. Then I just ride it out. Somewhere here it would have taken me out probably. I'm not always using the moving average to get out. That's when I'm actively in front of my computer, then I use that. Otherwise, I'll show you guys the other technique that I use to get out of my trade, but that's for the next videos. So just look how easy this would have been. Let's move this thing here. First 1-to-1, first target would have been somewhere there, 31 pips. Second one would have been there, 62 pips. And then my trailing stop, let's see where this thing would have, let's move it to 20. And let's see where we would have gotten out. You see, guys, the first thing that you need to notice is I'm not guessing anything. I'm not doing anything where I could have said, listen, I'm guessing about what's going to happen. Where must I do what? No, no, no. I'm not guessing anything. I'm not, you know, I go to strictly by the rules. The rule said, listen, I'm allowed to enter here. And the rule says, well, according to my rules now, I must get exit there for my third trade. So you can say, listen, okay, but I've got my first and second trade is profit. So I'm going to put my stop loss just above this. And I'm not going to give it a chance. It's already that 10 pips. I'm not going to exit. So if you say I need to exit, I'm still strict to my rules. Then you got exit there. You got out there on 20 pips. So you would have made. Let's say this would have been maybe 0.7%. So this trade would have been 3.7%. Or if you say no, leave this and it continues and continues, you only got out here. Then this is another 173. This would have been another, every 30 pips is a percent. So this would have been 4, 5, 6% plus the 3. So then the trade would have been 9% on your trading account, guys. For only one trade, 9%. This is from here to there. It took 4 days. It took the whole week, but it's 9% on your trading account. So if you had $1 million trading account, then you would have made $90,000 on that trade, 9%. So in my case, it's just a few, well, maybe $90 for my $1,000 account, but $90 is still a lot of money in South Africa to rand. But this is what I'm saying. So I'm only catching this move, or if I'm catching this move, or let's say I'm on the 1 hour now and I see. Remember, I don't want to trade down, so I'm going to look for the. My analysis was on the bigger time frame. If you want to trade sells, then you must do your analysis on the smaller time frames. But just look at this candles after this pullbacks and flags that you could have traded all by just going to the 15-minute now. Let's mark one of them with a blue, and then we go and check it out on the 15-minute for the last one. So guys, look at how many trades I'm getting here. While you have this one from the bottom, your weekly one, you can still, whenever you get to see, but this is a nice flag, you can still be active. You can still trade and trade and trade. We're all trying to build this trading accounts so that we can get to financial freedom. You know, I'm not even close to that, but I'm making profits every month, every week. And being a profitable trader is what it's all about. You know, you can, when you get to a profitable trading strategy and a way, you can make money every week. Nobody can take that away from you. You are a profitable trader then, and then you can decide, listen, I'm going to take a little bit more risk here or no, or you must have your trading plan and then you must stick to it. There's nothing, you can never break your rules. So on the 15-minute, what do I see here? I've seen my flag. Now I see, oh, you see price broke my moving average here. That's why I'm using the trend line as well. So now I see, okay, price broke both of them right here. Let's activate or put on the other indicator. So what I'm seeing now is, let me open this thing. Let's put that things, the line, the vertical line, so you can see. So here, yes, from here, or from there, it was on top, the blue. My rune indicator only gave me the confirmation there. And let's see what happened on the chart. The chart, it was about there. So let's go to the rune. It's the furthest one. We must go to this one where they all align and all agree. And let's take the trade right there. Let's just check on this candle right there. And it says the ATR is 8. So it's going to be 12 pips. My stop loss is going to be 12 pips. Just right there. And then there's my first take profit at 1-to-1. Then 2-to-1 is here. And then you can obviously trail it by moving this thing to 20. Oh, it was on 20. Let's move it to 12. Let's just check the entry again. That's the same thing. And on 20, let's see where it gets us out. You can play with this around. You can put it on 30 if you think it's getting you out too much and too soon. So the 1 second take profit was hit. This thing would have been on stop loss, and then it came down and hit your stop loss with break even. So you made 3% on this trade. But this is how easy it is, guys. Just follow whatever you see. What I'm trying to do is I check my market on the weekly so that I know the direction. But just look if you see this direction here. This is what I'm saying. If you know this is happening on the higher time frame, look, now it's the 15-minute. Then you've got all these opportunities that you can trade, all of them. Some of them you will lose. Let's say in this one, I promise you, with the indicators, we would have won that one. We would have won this one. This is a normal ABC. This one, I think we would have lost. It doesn't look like a flag, so it's just a V. Normally the V, well, it did go in our direction. So let's say you win 6, you lose 1. This is exactly what you need. You're never going to get a strategy that says, listen, you're winning every trade. No. But if you can win more than 50%, you're on the right way, on the right track, and you're on your way to becoming good. Now the only thing is targeting the flag, seeing what you need to see in this market. Let's say you know now you had this range, you had this it was support here. Let's just make this thing again here. So now you had the support, resistance, support, you're waiting for resistance, but when it broke out here, retested, moved down, there's your first flag. Now you know, okay, we're out of this. The other people were trading sells and buys all in here. Now we're moving down, so you look for a flag there. Let me just, here's an example of a flag that should have happened. And it went a little bit, but then let's say this your take profit 1, you would have made your put your stop loss at break even, so this one you wouldn't have been stopped out. There's another flag you could have taken going down, but go and start on the weekly and see where the market is going. That is the most important thing, and you don't want to be trading against the market. So if on the weekly you saw support, resistance there and support below here, and this thing started going down, then you will be looking. If this thing had an impulse and an A, B, C move, this is a nice pullback going down. There's a pullback going down. There's one going down. There's one all the way down to here. There's a big one. Look at this pullback here. This is a flag that took 2-3 years. So in this flag, if you see this, let's go and have a look at this, guys. If you see something like this, this was from 2016 to 2018. 2.5 years that the market stayed in this flag. This is still a flag and it still came down. People will say, no, but it isn't. No, it was. Until this impulse and its correction, if this thing doesn't break the high of this flagpole, then if it breaks this, then this was invalid. If it doesn't break this, and it goes A, B, C, then your move is still coming. The move is still coming, and we knew it, and we were waiting for this move ever since. We caught some of this. I don't know. Some of the people got out here saying no, it's a sideways move, but some of us stayed in and we caught all of this down here. Let me show you what you could have done then. But now let's say you're waiting for this for the move down. So what I will be doing is once we add a 1, 2, 3. Now we can put a trend line there. Trend line would have been a little bit different. Just look at this box here, coming down again, coming down again. Once we had this M move, or the thing that the people is trading here, double tops or tweezer tops or whatever, the people started to sell, and other guys were buying here. You could have traded inside of this thing because this is on the weekly. So if you see up, down, going up inside this channel, you could have stayed with it. If you go to lower time frames, and every time the market hits the bottom here, you will see thousands of flags on the 1 hour and the 15-minute going up. If you see it's coming to this line, get out. Then there will be thousands of flags selling. Remember, the best thing here is if you sell this thing, let's just see if we put it level like this. If you sell on all this up movements, remember we are on we are looking for this. So if you sell every time it goes a little bit higher, you can make your cash. Let's say you sold it there, there's a flag, you sell it here, and you get this breakout. There was it on top, you get flags, and the trailing one, now you're getting this move. So for you, your first trade would have been here, your first and second trades and so on would have been here. This is 3%. This is doubling your account, guys. This is thousands of percent or 100%. Understand? So you're looking in the market, being patiently trading this, surviving, making some money, but then suddenly you get this move on this one pair. So you stay in this thing for another 6 years. This is from 2018 to now to 2020 right now. So that you could have stayed in this for 2 years, making thousands and thousands of dollars, but you need to know what you're looking for. So that's what I'm saying. We all started selling this because we saw the first thing was like this. The first one was like this. Then we said, okay, this was the flag. But with this, we sold this. And there was a small flag we sold. Then we made our things and they take out the third trades out. Then we had some extra highs here. Just look at this. How strong this resistance area was right here. My money came up all the time. And then it shot up, take out all the stop losses, and then the market came down. The banks likes to do that, but what I'm showing you guys is just my strategy for now, guys. Go and check the flags, but start on the higher time frames. Go and start on the higher time, maybe even the monthly, and see where the market is going right now. You can see on the monthly, we had this flag, and now we had an impulse. This is showing us a nice. If we go to the 4 hour, remember this is going up again until this up to this resistance. So this is just a flag for a bigger move, or until we get higher highs, then the flag's invalid. If you get a higher, then this flag's invalid. But for now, we are buying in this flag all the way up to there, looking if this thing wants to truly come down in some more or not. There is some space. Look at where the market was here. There's a lot of space. So this can be a nice flag for selling. But for now, on the smaller time frame, not on the monthly, there's possibilities for buys here. When we get to the top, when we reach the flags ending, you can have a trend down on the bottom. When you see this break, get out of the trade and start for sales. Start looking for sales going down again. But that's it for this one, guys. Just go and have a look where the market is going and then try to follow it. Try to trade with it, but stay away from support and resistance areas for now. Just whenever the price is support and resistance, there's resistance and support is here. We don't care about the bounce or whatever. If it starts going up, we're usually expecting it to come up there. Whenever it's giving you pullbacks and flags, that's where you need to get in and need to trade all the way up to there. I hope you guys enjoyed this one. This is my trading style. I gave you the settings of the indicators as well. There's one more strategy that I need to show you guys, and then we're going to strictly go to IM Mastery Academy, and we're going to trade with the harmonic scanner and things like that. I was with them for many years, and then had to go and do some work on a farm, so with no internet, and but I'm back now, and I followed them again. I joined with them again, and they just got better, guys. I'll show you everything. We made a lot of money just today. But I'll show you it all, and then we'll speak soon.